GM. GM. So, today's lesson, a quick one about mindset and psychology. As I record this, Bitcoin is pumping. If you've been tracking what I've been talking about, I've been saying that I expect this to happen for 2 weeks now. We pumped off the lows, came up into a consolidation, consolidated sideways. It got really choppy, lots of sell-offs, lots of dips, lots of bounces, really bad price action. And then now we've broken out. So I'm saying this because probably a lot of you are now feeling FOMO. You're probably not long. You didn't take any positions or open any longs because everything was looking a bit shit. And now you're probably thinking, is it too late? Should I buy? Should I get long? What should I get long? Is it going to go higher? Is Bitcoin going to go to 45, 46, 50? The question of whether it's too late or not is really not the right question you should be asking. The question you should be asking is, why am I thinking this now? So, one of the most important things that you realize is it will never, the best entries you get, the best longs you take, the best shorts you take, the best trades you take, will be the ones you take when you don't feel like it. And that doesn't mean that when you feel like the market's going to go lower, you automatically go long. It's not a fixed rule that you do every single time. But I want you to study your emotions right now. If you're not in a long and you see the market pumping and you feel FOMO, understand that you could have been long from lower. So why weren't you? There's only two reasons why you're not long. One is that you felt fear and you didn't want to get in. Or two, you didn't even have a system, right? You didn't have a set of rules that allowed you to get long. So that second part, that's easy to fix. Go and build systems. That's what bootcamp teaches, both from white belt and blue belt. That's what all the lessons will teach. Find a way of analyzing the market so it gives you a high probability setup. That's easy. The first part is where you can take your trading to the next level. When you wake up and you look at the market and it's red or it's down or it's choppy or there's sell-offs or there's bad news, anytime you wake up and it feels bad, right? When we're in a bull market, we're in an uptrend, prices were going up, but then prices went down or sideways or got boring or got shitty or got low volatile or people were laughing about Bitcoin being a stable coin because it didn't move for 2 weeks. Do not get bored out of doing your work, right? So if it seems boring, you should be looking even closer and saying, okay, is this leading to something? Because right after that period of price going nowhere, that's always when price has a big move. It doesn't always go up, it could go down. So if you ever feel bored or like you don't want to look at the charts, look more, do more work, do more analysis, look harder, because that's often where there's opportunity. The market's just a collection of people. It's a collection of people and all their emotions and all their psychology and their opinions translated onto a chart. So if you think it's boring and you're like, oh, fuck that, Bitcoin's not moving, that's what other people are thinking, but they're the people who are going to miss out on opportunity. The people who capitalize on the opportunity are always the people who get in before a big move. Again, whether it's up or down. By the time the breakout happens, there's already been so much that has happened. There's people who have got themselves positioned when it looked bad, when it felt bad, when it was boring, when everybody else was turning off the screens, they were turning them on and doing more analysis, more research. So this is why it's so important to keep a journal and keep an emotional journal and a log of your opinions, your feelings, your thoughts every day. And particularly the days where it feels bad or scary or shit, you should be asking yourself, should I be buying here? Not saying I will buy, but should I? What does the data tell me? What do my systems tell me? I know price looks bad, but it always looks bad before it looks good. And if it always looks bad before it looks good, then getting in when it looks bad means that by the time it looks good, I'll be in profit. That's the fundamental basis of how a system begins. So, if you are currently sidelined, not long, and you're FOMOing, Think about it this way. This is probably more for people in blue belt, but if you're at the backtesting stage of white belt, this applies as well. If you're not in boot camp, get in boot camp and get to that stage. How about you go and try and build long systems for when the market looks bad? Why not go back and study the market after sell-offs, after red days or red weeks, or after a big crash, or after just a big dip, a 20% dip? How does the market tend to move? Is there any indication? Let's say there's a big sell-off on the 4-hour chart. But then if you go to the daily or the weekly, have we sold off into weekly support or daily support? Like this current move. Bitcoin had a strong sell-off from 49 to 39, but guess where it ended up? Right back into the weekly Michael's EMA, the 1221. So you had this big, crazy, scary sell-off that everyone thought was the end of the world, yet it came back to a strong weekly trend band. So is there edge in that? Can you go and look at other times when price looks like shit, but it's actually technically coming back to a horizontal support and resistance on a high time frame, or into a 1221 EMA, or even to a 50 or 100 or a 200 or some type of technical setup? Is there a bullish divergence on the RSI, even though price looks bad? Because the best trades I've ever taken, the best trades that most of you will ever take, are the ones where you get in when you don't want to, but your system says yes. Perfect example is that one. You won't feel like buying when it goes 49 to 39, but if it goes 49 to 39 and then it's getting into weekly support with the weekly bands, and then you get a reversal candle, and we traded at 38.5, 39, 40, 41, 42. We traded there for 2 weeks, and there was loads of opportunity to fill longs. Doesn't mean that you have to feel bad about missing this move, but can you reverse engineer it, deconstruct that and say, okay, I'm going to spend some time replay trading, and you don't have to pick system rules. Just go on replay trading. Go on to replay trading, go on to a 4-hour chart or a 12-hour chart or a daily chart, and just let it play through. And look at the really bad days, because it's fear you want to buy. Again, you don't buy every time there's fear, but go to those times where it feels like, whoa, that would have been scary. Big red candles, 3 days red in a row, whatever. Breaking structure, selling off, and then think, okay, I know now this is scary. I know now this is a fear-driven market. This is a leverage liquidation, but how can I craft a system that will help me find entries in all that noise? Because if I can find a way to buy when other people are crying and complaining and shitting themselves and losing money, then all I have to do is sit tight and wait until it starts pumping and they all get happy and euphoric. And by that point, I'll already be in profit. So I'm safe. Worst case scenario, I end up going back to break even. But you'll put yourself in a position to get more trades in profit. So it's an emotional control lesson. It's a psychology lesson. The best time to buy is when you don't feel like it. So try and build systems that gives you entries when it doesn't feel like it on the chart, but your technical system is telling you there's good edge here to get long.